Hello everyone and welcome to today's morning report with me, Richard Perry, market analyst at Tech Markets on Thursday the 14th of August. The European markets are fairly mixed actually at the open, and that's come after the announcement of the Eurozone GDP data across the countries. For Germany, France and Italy have all missed expectations, and both the DAX and the CAC are lower. FTSE's just slightly positive, nothing too major on the upside, but and that positivity through the FTSE has certainly been helped by a decent close on the S&P 500 last night on Wall Street, and also into the Asian trading session as well. There's not a great deal of driving force behind equity markets, and generally when that happens, the S&P returns to type and just drifts higher. So about 0.7% on the S&P, so a decent upside there we've seen overnight. In terms of the dollar trading, we've got the dollar just slightly positive, nothing too major, but the sterling is still weak after yesterday's sell-off, and across the board, to be honest, the euro is actually holding up pretty well despite the weak data that we got out of the Eurozone today. GDP in Germany falling 0.2% on the quarter for the second quarter of the year, and also French GDP basically flat, and again Italian GDP also missing expectations as well and disappointed in a contraction. So across the board, it's not looking that great for the eurozone. It doesn't bode especially well for the Eurozone wide number that is announced at 10 o'clock today. 0.1% expected there growth wide, but certainly that it was before you had the countries announce their GDP, so the likelihood is for an undershoot of that. At the same time, we've also got the HICP number that comes out at 10 o'clock. That's expected to be 0.4%, which was the number that we got on the flash data a couple of weeks ago. We've also got jobless claims in the States at 130. That is expected to just rise slightly from 289 to 295, but still below the 300,000, which would be certainly a strong number. In terms of my charts of the day, I'm going to look at the euro sterling, and I think in terms of what we're talking about, or what I've been saying about this euro rally potentially coming through, this could be a decent way to play it, because certainly sterling is weakening as we move through at the moment, certainly against the dollar, and it seems to be that weakness in sterling is showing up through euro sterling as well. Euro sterling completed this base pattern last week on a move through that 79.85 mark. And now that sharp retracement that we've seen in the couple of days, but then the big move up higher, another close above that took it to a 5 week high on euro sterling in terms of the breakout of that base pattern. So it looks to be confirming that base pattern as we go on. The interesting moving average here is certainly this 21-day moving average, which capped all these gains through the sell-off and is now beginning to rise and also be supportive as well. That comes in at 79.38 at the moment, to be exact. Furthermore, you've got to move above the 55-day moving average, and also we've now broken this downtrend as well. So several technical indicators suggest that euro sterling is going to be improving now. In terms of the momentum indicators, the MACD lines are just beginning to turn positive, but still that's just a retracement at the moment. But certainly the RSI is looking far more positive than it has been for all the way back until March, which is when the big sell-off started to really happen through this year. So it certainly looks like the momentum indicators are improving. You've got this base pattern in place. That base actually gives us an implied target of 81.15, and it certainly looks like we're going to be testing this 80 spot. Well, sorry, excuse me, 80.34 resistance of that late June high. Then you're looking at this old support now turned into new resistance of the lows back from May, which is 80.70 and 80.60 as well. So those are the levels that you've got to provide resistance on the upside, but it certainly looks like it's going to be pushing higher now. Whether I mean, this is just still a retracement within the big bear run. You'd still say that there is a big bear market in euro sterling, and it's ultimately just a retracement back towards some of these key levels that we had on the breakdown level. Certainly 81.50 looks a pretty key resistance level there. So it's just unwinding some of that oversold position. But certainly at the moment it's improving, and the near-term outlook is for a euro rally here. In terms of the support levels you need to be watching out for, just move on the intraday chart there. This is the breakout that we had above that 79.85 area, and that becomes supportive, and then within that you'd probably be talking about maybe the 79.20 mark, but it certainly looks like euro sterling is beginning to rise, and certainly that euro rally is showing through with this chart that we've got going here. Anyway, I wish you good luck in your trading today. Certainly the GDP number out from the eurozone could have an impact at 10 o'clock, but if the reaction to the data that we had this morning is anything to go by, then euro dollar is basically flat on the day, and obviously euro sterling is higher because sterling remains weak. Then perhaps the market has already factored in for a weak number on this euro, and perhaps the support may start to come through. Anyway, I wish you good luck in your trading, and I'll speak to you later. Thank you.